Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Today is the last trading day of the week. It is the last trading day of the quarter. Heads up, caution day. We are dealing with just sort of the end of something rather significant. That's Q1. So let's take a quick lap through what's going on right now in the broader. Actually, I'm on ZB. So let's take a quick look at yields and bonds. And a couple things that we are looking at right now in bonds is, not necessarily whether today is up or down, but rather as we're going into the end of the quarter and as bond traders are thinking about what's coming 3 months, 6 months from now, are yields lower? And remember, because it makes perfect sense, when bonds move higher, DLT, ZB, when those move higher, yields are actually moving lower. All right. And I know it's not a significant amount, but remember that the bond traders have already made their move, right? That was way back in October of last year. They've already made their move. So we're just sort of levitating up here. But any type of strength is indicating a little bit lower yield, staying above the 200. That's indicating we're at least in the bullish hemisphere. And we need to see, I would like to see a little bit more support above 120, and we'll go from there. Now, bonds don't have a trend. If you take a look at the lower part of my chart, that's the top tier multi-structure. And we'll be talking a lot more about this, but this is the next gen. This is the evolution of what is happening in modern day markets. 0 days to expiration, algos. How do we better accurately define what's happening in a chart? Doesn't matter if it's a daily, weekly, 5-minute, 2-minute, doesn't matter. But how do we better identify what's happening? And so with that, armed with that information, if I take a look at the bond market versus the gold market, gold's got a trend. And that's the kind of trend we want to take advantage of. So cue the uptrend. Perfect. That's been in place since the beginning of March, 8th actually. And by the way, that's how specific we get. What day did the uptrend organize in a way that we trust it to follow through? What day did it unorganize? That's really important too. And by the way, this is not just about uptrends. We can do the same thing with downtrends. And this is not just about now, but the reality that we're going to be dealing with for the next, who knows, 50 years. So when I look at gold in an uptrend and I look at bonds and chop, I'll pay attention to bonds, but we'll trade gold. And by the way, my mastery folks, we're going to be taking a nice win out of gold today. So heads up, that alert for the take profit, the scale out, as we like to call it, will go out. Nice move in gold. But this is what trends do. If we're looking for continuation, if we're looking for follow through, this is what trends do. All right. So good morning. Good morning. Good to see everybody. This is what we're dealing with here as we wrap up the end of the quarter. Oh, by the way, what does a strong gold market tell us? Well, remember that gold is a play on real yields or real interest rates. And that's the short end of the yield curve, the nominal yield of a bond minus the rate of inflation. When that narrows, gold goes up. All right. That's just the reaction. Keep an eye on that. Good stuff. All right. Good morning. Good morning. I love gold. I like it. I would love gold on a pullback again. Right. So that's a great point, Stephen. When we find these symbols that are moving, when we find these symbols that are moving up and they have that trend, we can look at the structure. I look at my top tier structure and say, all right, I've got the wind at my back. And so exactly, I'm not going to abandon gold and say, hey, did that, moving on. Oh, no way. If we get that next pullback, absolutely. And remember, gold can be traded via GLD or GC futures. So if you're out there saying, Rog, that's all fine and well, but I don't trade futures, that's okay. Many of our members in the Sector Secrets Mastery, or as we like to call it, the Sector Food Dojo, all right, many of them do not trade futures. Some of them are working on dealing with the leverage of futures, but we also always have, not always, we often have an ETF alternative. Speaking of ETF alternatives, traders, we're going to have to, not because we necessarily want to, but options are expiring. So here's another one of these kind of futures to ETF relationships. and that is what's happening in our Bitcoin buy. And we did this not via Bitcoin futures, not even through the crypto itself. We did this through the BITO. So we'll be jumping off this ride if we haven't already. It's been a good ride. Again, can we focus on trends, or at least focus on things that are more likely to follow through after they hit the daily price movement range? All right. So with that in mind, that's a little bit of look at our current open book. And I think it's part of my job to talk my book, not to talk my book in such a way that I'm encouraging folks to trade now, but rather so everyone has a really transparent, clear view of what I am doing and where I am doing it, and to a certain degree, why, what that connective thread is. All right, moving on. Let's see. Christian asks, I've always noticed you check each individual month on the FedWatch tool. I do, because it's aligning to the futures contracts. Have I ever checked the probabilities tab? I have. By the way, yes, if we wanted to spend 10, 15 minutes, and thank you for the question, Christian, if we wanted to spend 10, 15 minutes breaking down, as I like to call this thing on the screen right now, the macro decoder ring, we could definitely dive into a lot. Do I habitually do that? I don't. I think that if I can take a glance, my thought is this, Christian, if I can take a glance at something, get the information I need, and move back onto the charts and risk management and watch list building, and then ultimately setups and trades, I will. It's really easy to go down the rabbit hole. Maybe something I'll do on the weekends from time to time, but I try not to Monday through Friday. If I can get the information I need, sort of that top line number, I'll move on. I think in trading, we can go down rabbit holes really, really quick. All right, awesome. Thank you for the question. And by the way, for those of you that are wondering what this is that Christian is referring to, this is what we use, well, I'd say constantly, but that's probably not even often enough. We're consistently checking this because the trends that we're dealing with are trends that have been in place for many, many, many months now, definitely for 2024. 2024 has been a fantastic year for account growth. Just yesterday in the Sector Secrets Mastery, we had 2 or 3 members, and I didn't expect this so soon. A lot of, especially this soon in the year, or even this soon within our traders who have been with us for just, 1 month. A lot of them have doubled their account. Not in any way to say that's typical, but it's possible in an environment like this if we don't keep worrying about, oh, the top is in, we've got to trade the short. Right now, this is, I don't want to say easy trading, because trading is never easy, but it is straightforward. So yeah, right now, Christian, this is telling the story. The Fed is going to cut rates, and it's looking more like June could definitely be a little bit more likely than it was just a few weeks ago. But June 12 is, far, far away. But if this is how Fed fund futures are pricing in rate cuts, tough to be a bear, right? Same thing I've been talking about for a while. Tough to be a bear. All right. So let's see. Questions? Everyone's already ready for the weekend? All right. Well, I do want to mention, despite the fact that today is the last trading day of the week, this is kind of unusual that tomorrow we do have some data and a Fed event on Good Friday when the stock market is closed, the futures markets are closed, but it is what it is. We'll just observe, and we'll have to see how Sunday's open and the fresh month trades. But we still need to get through today. End of quarter, we're getting final GDP. We did 40 minutes ago. Final GDP, and then pending home sales. And actually, the one that I'm most interested in is not the GDP number. We already have it. And largely, we're seeing the strength continue. It's this sneaky little revised University of Michigan consumer sentiment number, which, by the way, kudos to Forex Factory here. For a long while, this particular hot zone, this consumer inflation expectation, sometimes if it's the preliminary or this is the revised, sometimes these are not red hot. I recall sometimes they don't place the red icon for the red hot zone there. This is an important hot zone. It's it is important to understand where the consumer is in this part of the cycle. I wish they would actually, no, they always have that red. What I wish they would make red, I take that back. What I wish they would make red is the revised University of Michigan inflation expectations. While this is not the PCE, while this is not the CPI, while this is not a PMI number, it is an important one because at least gives some insight into inflation. And while, yeah, we could argue the Federal Reserve has probably already made their mind, they're just not really telling us yet. Uh, every little stepping stone to that eventuality is going to keep equities moving higher, keep the bond market moving higher, keep gold moving higher, keep crude oil moving higher, keep equities in general just moving higher. So it does help. It does help. All right. Next up is, let's go back on over to the charts here. And let's go take a look at the S&P here. All right. I'm not anticipating a dramatic move like yesterday. I'm really not. However, I try not to guess at what the markets are going to do. Remember, we counterpunch, we react. We're the batter. The market is the pitcher. But right now, when I take a look at where we are on this chart, we did a little bit of this the other day in top tier. And it's the same thing I would do with our position in gold and everything else. Where are we in relation to the previous session close? That's one of the easiest metrics you can put to work in even in your day trading, but just generally in your overall sentiment reads. Let me move this up. So, I'll just move this manually drawn line. Say, okay, that's where we are in relation to the previous session close. Let's do that on the ES here. I'll just take this manually drawn line. And I am curious. I want some specificity here. 53.08 and a quarter was yesterday's. There we go. 53.08 and a quarter was yesterday's close. Are we above it? Not by much, but watching that line will be really, really important. Okay, let's take a look at the NASDAQ and do the same thing. All right, so yesterday's close was 18,505 and a half. All right, so sorry for looking away. I'm actually just doing this on another screen here. All right, so you can see, I will mention, and I know my Sector Secrets folks out there are saying, wait a minute, Rag. Yeah, I know Sector Food. This is not ideal when we don't have that clarity above the previous session close. But here we have the Dow, previous session close, 40,144. And a little bit more clearly above, right, that level. And let's go take a look at the Russell. Don't want to neglect that Russell, although sometimes I like to, because it's not really an index that's tied into the same narrative that the Dow, the Nas, and the S&P are. And by the way, for those of you that are wondering, hey, Rog, what gives? Why is the Dow higher than S&P and Nas? Remember, did I just lose my camera? I might have just lost my camera. That's okay. Nobody needs to see my face. All right, hang on. Let me just, there we go. That was weird. So anyway, my wire might be going bad. So if we're seeing the overall movement higher on the Dow, what could that be? What could that be? That is likely a reflection of what's happening in things like energy, industrials, healthcare, financials. Those have more impact in the Dow than they do the S&P, and those have next to no impact in the NASDAQ. So when you start seeing certain sectors outperforming others, that is going to direct you. It's going to direct us to where the follow through might be best. And by the way, wow, look at XLI. Yahtzee. So in our Sector Secrets Mastery, we have been focusing on XLI, and we have a long position there. And yet another one we'll be able to likely, if we want to scale out again or pay ourselves cool. But all right. Let's see here. All right, XLI. I love it. I love it. Okay. Yeah, we have a T2 coming into focus. All right. Let's see, what else do we have here? Let me catch up with some of the questions. Um, hey, Panther, I see your question, and it's not that well, I'm not playing that, and I mean this with all due respect. I could care less. It's not where my focus is going to be at. I'm not going to play meme stocks. It's something sitting in a SPAC. I got better things to do with my money with a better risk control. So by no means do I want to necessarily dismiss your question, but what's going on with that particular symbol, not part of the equation for me at all. All right, moving on. So I'll let other people play DWAC. Good luck. Yeah, not my jam. I'm going to play things that have a higher predictability of movement. They're not meme driven, news driven, whatever driven. They're being driven by the alignment of sector weighting and stock weighting in the indices. That's why, right? So my list is not looking at whatever is kind of a pop culture thing, right? To me, that's a GameStop thing, and I'm not going to focus on those when there's predictability and far more probability and consistency in alignment with the broader averages. What do I think of XLV? It's having a very good end of quarter, and that's boding really well, Eddie, for our AbbVie position in the Sector Secrets Master. We have an April 19, 175 AbbVie call. So whether I'm playing the individual stock, kind of going back in many ways indirectly to Panther's question, why would I focus on AbbVie? Because healthcare is heavily weighted in the S&P, and then it's also weighted within the Dow quite heavily. And then AbbVie is a top, I believe, 5 weighted name. So there's the alignment. And by the way, there's a nice, calm, risk manageable follow through. That's the way I look at that. All right, next up, Pierre's asking about Taiwan Semi, number 2 weighted stock in the semiconductors. I would it's certainly flirting with the daily price movement range, but here's where, Pierre, it's less about Taiwan Semi specifically and more for me about what is NVIDIA and the SMH as a whole doing, and I'll focus on SMH. So what do I see? I see that it's telling me to trade SMH is really what I'm thinking. All right, JT asks, please show recent day trading winning trades where the V-score indicator played a key role in the setup of the trades. So JT, I've got 30 seconds, and that's not what this show is about, but I appreciate the question. But here's probably, I'm just guessing, what the underlying question is. Do you use the V-score? Of course. Does it play a role? It does. It does. So if I'm looking to confirm and remember, the V-score in and of itself can be used. It can as an entry, but I never teach that. I never say just follow this one indicator blindly, and that's the only why that we need. If my V-score is syncing up with support, if it's syncing up with the range we're dealing with, if it's syncing up with a DPMR, with a Darvis, I use it the same way I would use anything else. But the cool thing about the V-score, and thank you for asking about it, is that it's going to give me a decoded view of volume and support and resistance via volume. So if I link up V-score support and resistance to, say, for example, the daily price movement range, it's a great hand in glove fit. And if you want to see the trades that we're taking day in and day out, gang, we had 3-day trades yesterday morning by 10:30 a.m. And we went 3 for 3 on the day trades. If you want to see what we're doing day trading wise, come check out what we're doing in the mastery, right? Come check out what we're doing, and then you can see, Rog, this is for me or it's not. Proof's in the pudding. We have traders that are growing accounts because that is the mantra in the room. Account growth, right? So anyway, thank you as always for the questions. And I will see you. Actually, I will do a charts and coffee tomorrow because of PCE. I think it'll be a good thing to touch base on. So yes, it's Good Friday, and I want to be respectful to that. But there is some interesting, data hitting the market. So we'll do a brief charts and coffee tomorrow. All right. Be good to each other, gang. I'll talk with you soon.